What's up, everyone? Dave here, and today we're tackling a stock that's been absolutely on fire, leaving a trail of questions in its wake. SanDisk, ticker SNDK. This thing has rocketed, and everyone's asking, is there more upside, or is this just a speculative bubble waiting to pop? We're about to dive deep and find out. All right, let's set the stage. The market narrative around SNDK right now is a powerful mix of excitement and a little bit of caution. We've seen this stock deliver a staggering 127% return over the last 90 days, making it a major hot topic. The story here is primarily twofold. First, we've got significant supply constraints in the NAND memory chip market, which naturally pushes prices higher. And second, the absolute beast that is AI adoption. SanDisk's enterprise solid-state drives, or ESSDs, are absolutely critical for powering those data centers handling all the AI crunching. So the street is largely seeing SanDisk as a prime beneficiary of this AI boom. Now, it's not all sunshine and rainbows. Some analysts are sounding the alarm, wondering if this rally is getting a bit ahead of itself. You know how it goes. Supply shortages can quickly flip into gluts, which can hammer margins. And then there's the valuation question. SNDK is trading at a price-to-sales ratio of 5.2 times, which some folks view as pretty steep, especially with execution risks always on the table. So who exactly is SanDisk Corporation? Well, they've been around since '88, headquartered in Milpitas, California, and they're all about developing, manufacturing, and providing storage devices and solutions built on NAND flash technology. Think solid-state drives, embedded products, removable cards, USBs, basically anything that stores data super fast. Now, what's really got the market buzzing is their management's outlook. They're incredibly optimistic, projecting that demand for their NAND memory is going to continue to outpace supply, not just this year, but all the way through 2026 and potentially beyond. They're banking on their cutting-edge BiCS 8 technology and some very strategic customer partnerships to drive this growth. Okay, this is where we roll up our sleeves and get into the numbers. We've got this bullish market narrative, and we've got SanDisk's highly optimistic management guidance. How do these pieces fit together? Well, our analysis suggests that the robust demand for NAND, especially from AI and data center investments, is a very real, very strong tailwind. And with management confident that demand will outpace supply, it sets up a powerful fundamental story. Now, while that 5.2x price-to-sales ratio might seem high, the technicals we're seeing right now actually support a continued upward momentum, making our base and bull cases significantly more likely. Let's break down the scenarios. First up, the base case. This is where we assume management's guidance holds true. We're looking at NAND demand continuing to outpace supply right through 2026, driven by all that sweet AI and data center infrastructure investment. SanDisk successfully executes its strategy, growing revenue and expanding margins thanks to their BiCS 8 tech. Even with some valuation concerns, the continued strong performance justifies a premium. Here's how we crunch the numbers for this one. We annualize their Q1 FY26 revenue of $2.3 billion, which gives us about $9.2 billion. Then we project FY 2027 revenue with a solid 20% growth, landing us at $11.04 billion. We then apply a PS multiple of 5.0x, a little less aggressive than current, but still reflecting strong growth. That gives us an estimated market cap of $55.20 billion. With about 146.56 million shares outstanding, our fair value per share for the base case comes out to $376.63. I am assigning a 50% probability to the space case. Why? Because the recent technical breakout we've seen, combined with those strong fundamental drivers and management's clear guidance, really gives this scenario a strong footing. Now, let's talk about the bull case. This is our optimistic scenario, where AI-driven demand for high-capacity NAND storage absolutely explodes beyond current expectations. SanDisk isn't just riding the wave, they're surfing it, fully capitalizing with their BiCS 8 technology and key customer engagements. Management's forecast of demand outpacing supply extends even further, pushing market share gains and margin expansion through the roof. The valuation looks like this. Starting with that annualized Q1 FY26 revenue of $9.2 billion, we project FY 2027 revenue with an even more aggressive 35% growth, taking us to $12.42 billion. For this hypergrowth scenario, we're using a PS multiple of 6.5x. That puts our estimated market cap at $80.73 billion. Dividing by the same 146.56 million shares, our bull case fair value per share is a whopping $550.84. I'm giving the bull case a 35% probability. This isn't just wishful thinking. The technicals are flashing green here.
That strong breakout we just talked about, it indicates robust buying interest, supporting an even more aggressive upside as investors pile into AI beneficiaries. The current momentum and positive narrative make a sustained rally highly plausible. Finally, we have the bear case. This is our pessimistic scenario, where those worries about an overextended rally and potential supply gluts come to fruition sooner than expected. We could see increased competition, price erosion, and margin pressure. While AI demand is still a factor, a faster-than-expected surge in global NAND supply, or maybe a broader economic slowdown, could depress demand across other segments. In this world, SanDisk's current high valuation becomes unsustainable. The numbers for the
Bear case. Starting again with that $9.2 billion annualized Q1 FY26 revenue. But here, we project a 5% decline in FY 2027 revenue due to price erosion and competition, bringing us to $8.74 billion. We then apply a much more conservative PS multiple of 3.0x, reflecting lower growth and the cyclical nature of the memory market. That gives us an estimated market cap of $26.22 billion. With our 146.56 million shares, the bear case fair value per share is $178.90. I'm assigning a 15% probability to this bear case. And why so low, you ask? Because despite the inherent risks, the current technical setup simply doesn't support a near-term meltdown. We're in a clear uptrend, and the stock just broke above major resistance. A significant reversal would require a breakdown below key support levels, and we're not seeing that right now. It's a risk, absolutely, but less probable in the short to medium term. All right, let's pull up the chart. Here's what I'm seeing based on our technical analysis. SNDK is absolutely in an uptrend, no doubt about it. And get this, it just broke above major resistance at $345, which is a significant bullish signal. The next major resistance level we're watching closely is at 380. On the flip side, supports below are at 320 and then further down at 280. That breakout at 345 is key, folks, showing strong momentum. So, after peeling back all those layers, what's the final word on SanDisk? Is SNDK a buy? Based on our deep dive, the robust demand for NAND memory, driven by the insatiable appetite for AI, combined with management's incredibly optimistic outlook for sustained growth well into 2026, points to a clear answer: yes. The bottom seems to be in, and SNDK has strong upward momentum right now. With a combined 85% probability skewed towards our base and bull cases, and the stock demonstrating a powerful breakout above key resistance, the narrative is firmly bullish for the foreseeable future. This isn't just hype. There are strong fundamentals and technicals supporting this move. Given our fair values, the base case suggests a target around $376, while our bull case shoots up to $550. Of course, the bear case sits at $179. Looking at the chart, the stock just broke above $345. For those looking at potential entry points, a retest of that $345 breakout level, or if we see a slight pullback to the next support at $320, could offer compelling opportunities. If you're looking for more confirmation, a decisive break and hold above the 380 resistance would be another strong signal of continued strength. All right, if you found this analysis valuable, smash that like button, hit subscribe so you don't miss our next deep dive, and drop a comment below telling me what stock you want me to cover next. Your engagement helps us bring you more content like this. As always, folks, remember this is for informational and entertainment purposes only. I'm not a financial advisor, and this isn't financial advice. Investing involves risk, and you could lose money. Always do your own thorough research and consult with a professional before making any investment decisions.